Getting funding for real estate projects. It can often feel like you're trying to fit a square peg in a round hole, can't it?
Oh, absolutely.
Traditional lenders, they can move so slowly, have these rigid requirements.
Right.
And sometimes your deal, maybe it's unique,
Yeah.
or you just need speed, and it just doesn't line up.
Yeah. Timing in real estate, it's often everything, isn't it? A great opportunity can just, well, vanish while you're stuck waiting on some committee or drowning in paperwork.
Exactly. Capital needs to be agile, nimble.
To match the market, yeah.
And that's really why we're doing this deep dive today. We've got some source material here focusing on a private lender, one that seems to position itself as, an alternative to that traditional route.
Right. So our goal here, our mission for this deep dive, is to really unpack what's in this material.
Okay.
We want to understand who this lender actually is, what they're offering specifically, how they say they operate, and, what makes them different. All looking at it from the perspective of what matters to you if you're an investor, maybe a developer or a broker looking for financing options.
Okay. And the company name we're seeing in the source material is Elite Business Service, LLC. They go by EBSC Lending.
EBSC Lending, got it.
All right, so let's jump into this material then. What's the first thing that jumps out? What's EBSC Lending about at its core?
Well, the source highlights right away their focus. They're a fast-growing private lender, and they're specifically tailored for real estate investors and developers.
Okay, tailored.
And a key aspect they stress is asset-based lending. That's for both commercial and residential projects.
Asset-based lending. Okay, maybe let's clarify that a bit for listeners. What's the practical difference compared to, say, your typical bank loan?
That's a really good point. Simply put, traditional lending often leans heavily on the borrower's personal credit score, income, debt ratios, all that stuff.
Right, the personal side.
Exactly. But asset-based lending, which this material suggests is EBSC's thing, looks mainly at the property itself, the asset, its value, its potential. If the deal itself is strong, if the property has solid value, they seem more focused on that than maybe your personal tax returns from last year.
That could be huge for investors, right? Maybe ones with complex financials or lots of projects going on.
It can be a game changer, yeah. If the deal makes sense.
Got it. So focus on the deal, the property first.
Yeah.
The source also mentions their team's background.
Right. It says the team has decades of lending experience, and they've got professionals with expertise in both private and institutional real estate finance.
Interesting mix.
And they were founded in 2021. So that suggests maybe they combine that deep experience with perhaps newer, more flexible company structure.
Yeah, that blend. Established experience, but a newer setup.
That feels like it could be key to what the source is calling the EBSC promise. The materialists, customization, speed, and certainty. Those are their core selling points, it says. Yeah, they really frame it around raising the bar in private lending.
Yeah.
The document suggests this means, providing lending solutions that are actually customized, not cookie cutter, executing consistently, quick.
Getting the money out the door.
Right, and being there to provide the funding when you actually need it. They also mention building a reputation on integrity, creativity, and discipline.
Okay, high-level promises. But how does their operation, based on this source material, actually let them deliver, especially on that customization and speed?
So this is where the material gives us a bit more insight into their setup. They call themselves a direct lender.
Direct lender, meaning
What that means, according to the source, is they have complete control over the underwriting process and our strategic direction.
okay, control.
And their funding sources are apparently diversified and reliable. So that gives them, control over deploying the capital.
Control over underwriting. How does that translate into speed and customization for someone getting a loan?
Well, the source explains that all processing, underwriting, and closing are handled in-house.
Okay. All in-house.
They explicitly state this lets them fully control and expedite the process to meet our clients' timelines.
Right, I can see that. You avoid the handoffs.
Exactly. Think about a big bank where your file might bounce between departments, maybe external appraisers. Having it all internal, like they claim, should cut down on those potential delays.
So it links their structure directly to that speed promise.
It seems to, yes.
And does that also tie into what they call creative solutions? The source says no two loans are the same.
Precisely. If it's all in-house and they have that direct lender control, they can, in theory, be more flexible in how they structure deals.
Makes sense.
The material even uses this phrase, "this ain't rocket science," when talking about finding the best solution for unique needs.
Ah, okay.
It suggests maybe a more practical, less bureaucratic approach than you might find elsewhere. They also mention common sense underwriting and a simple loan process.
All right, so the structure seems built for speed, flexibility, maybe a bit less red tape.
That's the picture they're painting, yes.
Does the source give us any proof, any scale to back this up? Numbers?
It does, actually. They list some pretty significant figures for their track record. Let's see, 219 loans funded.
Okay, over 200.
$2 billion plus total transaction volume.
$2 billion, wow.
And lending in 50 states.
So nationwide reach and significant volume, especially for a private lender founded relatively recently. What does the source say that volume tells us beyond just big numbers?
Well, the document claims this volume and experience gives them an exceptional vantage point into commercial real estate markets.
Exceptional vantage point.
The insight there, I suppose, is that being active all over the country, constantly seeing and funding different types of deals, it probably gives them a broader, maybe more real-time pulse on market dynamics and what's working structurally than maybe a lender just focused on one city or one property type.
Yeah, that vantage point could be really valuable.
Yeah.
Does the source give examples? Specific transactions?
Yes, they showcase a few. Gives us a concrete feel for the kinds of deals. For instance, a $31.1 million construction loan in Los Angeles. That was early 2025, apparently.
Okay, big cute deal.
An $18.7 million construction loan in Philadelphia, late 2024. And then they list some others. $28.9 million construction in Jacksonville, Florida. $19.5 million refinance in Milwaukee. $23.7 million refi in Union City, Georgia, and a $20 million construction deal down in Bay Harbor Islands, Florida.
So decent size, different types, construction, refi, and definitely spread out geographically.
Exactly. And the material just states they're constantly closing deals nationwide, reinforces that volume claim with actual examples.
Okay, that seems to support the nationwide activity and handling significant deal sizes. How does the source position them against, say, traditional banks?
They're pretty direct about it in the material. It explicitly says they are faster than institutional lenders.
Okay, calling it out.
And provide reliable pre-approvals. So it clearly puts them forward as an alternative when speed is, the name of the game.
Right. Okay, let's get into the real nitty-gritty then. The stuff investors really zero in on. What are the actual loan parameters, programs? What does the source material say?
All right, this section lays out the tangible details. Loan amounts. They state it's from $5 million up to $100 million.
5 to 100 mil. Okay, decent range. And terms. How long are these loans for?
Terms are typically 12 to 60 months, so 1 to 5 years.
Got it. And the big one, leverage. Loan to value, loan to cost.
Yeah, this is a significant point from the source. They offer up to 85% loan to value or loan to cost, LTV or LTC.
85%. Wow. Okay. That's quite high, isn't it?
Yeah.
Especially in the private lending space.
It is. It definitely catches the eye.
So what's the takeaway for an investor looking at 85%?
Well, the insight here is clearly that they're willing to provide substantial leverage, up to 85% of either the property's value or the total project cost. So for you as an investor, that could mean you need to bring significantly less cash, less equity to the table, maybe only 15% compared to what a traditional bank might demand.
Which frees up your capital for other things.
Exactly. It frees up your capital. And it really seems to align with that asset-based approach they mentioned earlier, right? They seem comfortable lending a high percentage against the asset itself if they believe in it.
Okay, higher leverage, definitely notable. What about the cost side? Interest rates, fees.
Okay, interest rates are listed as starting at 9.97%.
Starting at.
And they also list points. That's 1 to 5 points.
And just to clarify, points mean?
Right. A point is 1% of the total loan amount, usually paid up front as a fee when the loan closes.
Gotcha.
So 1 to 5 points means an upfront fee somewhere between 1% and 5% of the loan value. The source also mentions third-party costs are standard.
Okay, so there's the rate, the points. What about how you pay it back? Payment structure, flexibility if you want to pay it off early.
Good question. Amortization is listed as interest only.
Interest only, okay.
And importantly, they state there is no prepayment penalty, no PPP.
No prepayment penalty and interest only. What's the practical benefit there for an investor? Why does that matter?
Well, the interest-only structure, that means your monthly payments are lower because you're not paying down the principal, just covering the interest.
Right. Helps with cash flow.
crucial for cash flow, especially maybe during construction or when a property is stabilizing. And that no prepayment penalty, that's a big one too.
Yeah.
It means you've got the flexibility to pay off the loan early, maybe you sell the property quicker than planned, or you refinance with someone else. You can do that without getting hit with an extra fee.
Which is key if you have a shorter hold strategy or you think rates might drop.
Exactly. That flexibility is really valuable for active investors.
Okay. Those parameters, higher leverage, interest only, no PPP, they do seem designed with active investors in mind. What about closing speed? They promise speed. What do the parameters say?
They list a closing time of 10 to 20 days.
10 to 20 days. That ties right back to their rapid funding promise.
It does. Seems consistent.
Okay. Property types. Use cases. Are they picky?
The source says property types are all, and use types are also all. All in all.
Yeah.
And interestingly, it specifically adds including cannabis.
Including cannabis. Okay, that detail seems worth pulling out from the source.
Yeah.
Why is that significant?
Well, getting financing for properties tied to the cannabis industry, it can be incredibly difficult, right? Because of federal regulations, many traditional banks just won't touch it.
Right, it's a tricky area.
So seeing including cannabis explicitly listed under all use types, it signals they're willing to operate in areas where traditional financing is often just unavailable or extremely hard to get.
Underscores that flexibility claim.
It really does, and their willingness to look at maybe unconventional deals.
And the all property types is broad, too.
Absolutely. It suggests they're not just focused on, say, multifamily or office. They're open to retail, industrial, maybe more specialized properties, which again fits that asset-based idea we talked about, if the asset makes sense.
And they mentioned lending in first and second trust deed positions.
Yes.
And across all 50 states, reinforcing that nationwide thing again. What about specific loan programs? Did they list different types?
Yeah, the source lists quite a comprehensive suite of programs. Let's see. Construction, cannabis, commercial bridge, C-PACE,
Okay.
fix and flip, hard money, line of credit, mezzanine, multifamily bridge, and rental investment.
Wow, that's quite a menu. Covers a lot of ground.
It really does, from ground-up building to quick flips, bridge loans, even mezz debt. Seems to align with that claim of offering flexible solutions for, different needs and strategies.
Interesting. The source material also seems to have a whole section dedicated just to brokers.
Yes, it's titled The Real Deal for Brokers. It indicates they actively want to partner with established professional ISO broker partners.
Okay.
And they highlight having a track record of responsibly and securely dealing with our partners and their referrals. So emphasizing trust and reliability for brokers.
And for brokers, speed is critical, right? Getting answers back to their clients quickly. Does the source give any timelines specifically for brokers?
It does, and it's actually quite specific here. They state that once they get a completed submission form and have a quick chat, they aim for conditional loan approval within 24 hours.
24 hours. That's fast.
And if all the necessary paperwork is there, they claim underwriting can be done in as little as 48 hours.
Wow.
And settlement, closing the deal, could happen as quickly as 3 weeks.
Okay, those are very concrete timelines aimed at brokers. Seems designed to help them look good to their clients.
It definitely reinforces that whole theme of speed that we've seen throughout the source material.
Yeah, it really does.
Yeah.
It suggests they've built processes, not just internally, but also for their partners around that core promise of rapid execution.
Seems that way.
Okay, so let's kind of pull this all together now for you, the listener. Whether you're an investor, a developer, maybe a broker listening in, we've unpacked this source material on EBSC lending. What does it all boil down to, practically speaking?
Well, based purely on what's in this document, EBSC lending is basically presenting itself as a strong alternative if you're hitting roadblocks with traditional financing.
Right.
If you absolutely need speed for a competitive deal, if you've got a property type or maybe a use case that banks just shy away from, like that cannabis example, or maybe a complex construction project, or if you're specifically looking for higher leverage, remember that 85% LTV LTC or certain structures like interest-only payments or no prepayment penalties. The details in the source suggest they're trying to fill those specific gaps in the market.
So the source material seems to frame EBSC lending as a potential premier financial partner, as they put it, especially for those who really value that flexibility, that speed, and need a lender who's comfortable with a wide range of deals and leverage points.
And just for context, the source also notes they've been as seen on various industry outlets, Yahoo Finance, ABL Advisor, Secured Finance Network, places like that, which suggests, a certain level of visibility within the finance and real estate world.
Okay, so we've done our deep dive into this source material on EBSC lending. The picture painted is of a fast, flexible, direct private lender focused on real estate investors. They highlight significant deal volume, nationwide reach,
Hmm.
and those specific investor-focused parameters. High leverage, interest-only options, no prepayment penalties.
Yeah, the recurring themes in the source are definitely speed and flexibility. You see rapid funding, faster than institutional lenders, flexible loan products, and financing all use types, including cannabis. It's pretty consistent.
Right. And the material also outlines the costs involved. That starting interest rate at 9.97% and the 1 to 5 points up front. Now, for anyone involved in real estate finance, there's often this trade-off, right? Speed and flexibility versus the actual cost of the money.
Absolutely. It's a constant calculation.
So when you look at a lender like EBSC lending, based only on this source material we've discussed today, how do you weigh that value? The value of potentially very rapid funding, the high leverage, the ability to finance maybe unusual projects. How do you weigh that against the costs outlined here, like that starting rate and the points?
Mm.
What specific project scenario in your world might make that speed and flexibility absolute non-negotiable? Where maybe you'd say, okay, the cost structure presented in this source is justified because I need those other things.
Yeah, that's the key question, isn't it?
Definitely something for you to consider as you navigate the financing landscape out there.